Alright guys, welcome back to another video, and slightly different today. Obviously Wednesdays are a bit more educational, you can say, and this stems off a topic from weekend predictions. So the Saturday video, it's green if you're looking for it, from what, like 15th or 14th of September 2019, and it's about double tops and double bottoms after trends, and why some opportunities I would still look for a short in this case, and then why I would look for nothing, right? I wouldn't be looking for anything. And that is fairly self-explanatory, but I'll sort of walk you through why I think like that, what I'm basing it off, and my theory behind it, because it's just my way of trying to understand the markets and what it does. Now, I've got two examples here, Aussie CAD and then dollar yen, which are very similar examples and, real life examples. So I'll go into them in a little bit, but before I get into it, I want to go through the theory side of it first. So, there's big difference between this, right? So let's say you've got this downtrend going on and you do something like this and you pull back. All right, so this is different to, right, this double top, that, and then coming back into this kill zone. Now the major difference between these is if you're looking at your technical kill zone, right, so your previous structure low and your outside return, and obviously all this is just flipped on the other side. If it's bullish, it will be your previous structure high to your outside return. And if you compare it with this one, the major difference is that this double bottom, this double bottom came off resistance of this kill zone. So for me, if I was to look at this, the move is made, right, instantly, because at this stage, right, before this move ever occurs, I'll be looking for a short from this zone. Now, the fact that we've come up to this zone and then made the move that I expect to be made, for me, like I said, that's move made, so I have no interest in that. However, the difference here again is because it didn't come into this zone. Now, it's not the best signs, because you can say, oh, price has held, twice, we can't put in a new low. However, my theory behind it is that you're looking at sell orders here. So realistically, what happens here is sort of irrelevant, right? Because you're expecting selling pressure from this trend to continue here. Now, yes, this might be a sign in, weakening trend, so you may not be expecting a follow through to break down to the downside. But in my opinion, there's still a lot of selling orders, and people like me, like with this approach, that don't care about this, right? That is double bottomed here, and I'll be looking to short here. Now, also another thing to look at is this on the lower time frame could just be this, right? This double bottom you might not see on the higher time frame, right? So you could say it's a matter of perspective of how you want to see it. So if this was, let's say, the 60, this was the 60, right, and something like this, but then this is on the daily or on the 4 hour, more most likely, right? On the 4 hour, all it says is trend continuation, and on the 60 it just says, okay, we've had a double bottom, but we're into this zone where we expect some selling pressure. Now, one of these, you could say this discovery, it's not a discovery, but it is in a way, because it's just something I've noticed, and I've evolved from my trading. So initially what used to happen before, and we'll take it back maybe 9-10 months ago, you could say I'd be very conservative, right? In my trend trading approach, if this was to occur, I stopped. I completely stopped looking for a pullback into this zone, because for me, my thought process back then was, right, we've double bottomed, we failed to break this low, the trend's gone. Technically it's not violated, but I'm conservative enough and I'll stop looking for it. And I did some testing, it's the all famous revolutionary impulse testing that I did, and it was on 2 pairs, right? So I'll throw that disclaimer out there. It was only on pound dollar and euro dollar, but it was a lot of trades. We're talking 500 trades each in the last 5 or so years. And when I say it's revolutionary, for me, it confirmed a theory I had in my mind, right, to do with the RSI strength and the impulses, and you see that's one of the main philosophies in my trading right now. And one of the things I was tracking was this, right, this double bottom. Did it come off a level I was interested to short at? And the level was defined, whether it's the technical kill zone, whether there was a little bit of structure in between here. So you know, let's say something like this was to happen and I was only interested in this small red zone here, right? If price came to touch this, I would stop looking for it before that, right? But if it didn't, if it double bottomed or double topped respectively before this kill zone, I'll still look for a selling opportunity as soon as price touches this. So what I mean by that is, well, the reasoning behind the touch, right? If there is a touch of this and let's say a wick, or you never know until the candle's closed, right? That means, you know, if it pushes down, the sell orders are filled, right? There's selling pressure here, the sell orders are filled, so I'm expecting selling orders to be there. And when I was checking through my data, you know, the RSI being oversold here and, you know, over here on this swing in this case, made a huge difference. You know, the RSI between these swings made a huge difference as well, in terms of the pullback, in terms of the entry, in terms of a few things. Hence my philosophy on them, you know, on trend continuation with RSI. However, double bottom and double tops surprisingly actually enhanced it, right? As in so on the pound dollar there wasn't too much difference, right? As in terms of it was profitable, but it's not like, you know, let's say the win rate of these is 50% and then this would be 60%. It wasn't the case. It was more or less even. However, on the euro dollar, right, this actually made it higher win percentage, right? Higher success rate based on, you know, the same methodology. You're looking at the same kill zone. It's just the only difference is a double bottom. Now, how can I explain that? And I think this is where sort of the interesting theory comes into place, and it's not confirmed. It's sort of how I'm explaining it to myself in my head. Now, if you're looking at price do this, right? I'll get into the comparison of the live charts soon. If you're looking at this with a V reversal, means strong buying pressure right there, right in this zone. Whether it's looking left, you know, this is your resistance support. There is strong buying pressure. So in a way, sellers were coming down, yeah, we're going down, boom, rejected, right? Straight push out, like, no, you're not coming here, right? You're not coming to the zone. Whereas this, right, this is same structure level here, right? I've double bottom, like, okay, you know, we're coming down, boom. You're not coming there, but, you know, it's not as convincing that these buyers are not sending them away. So you can say there's not as much conviction in the buyers. They're not really as interested because there's not as much buying pressure. And of course, you can say, you can argue the case, you know, price did push all the way back up with buying pressure, which yes, it did. But in a way, because of that initial interest, that lack of interest in buyers, it's almost like, okay, we're going to give you enough to relieve it, but, you know, realistically, we expect the trend to continue. And that's, you can say that, I don't feel like, you know, I wouldn't say that's right or wrong. For me, it's just the way I explain it to myself, because good moves don't last. So, you know, I haven't really noticed this, but it's something that I'll be looking at a bit closer. But if you've got a reversal like this, are you more likely for a retest, or would you rather have a reversal like, you know, sort of consolidate and then pull back and then retest? Which one's more likely, right? Let me change the color. My fancy ugly drawings. No, that's not what I meant to do. Right? Would I rather have, or which is higher probability? Is it this move, right? This red move, or is it this red move? Which one's higher probability based on, you know, the reaction here, So that's the theory behind it. I'll talk you through the live charts, you can say, which will be, hold up. Right, so this is what I'm doing. So as you see here, Aussie CAD. Now I want you to ignore everything that's going to the left, because this could be at minor level structure, major level wolf structure. There could be room to go lower. All of that shenanigans in school. But this is like the closest example I could give. Now, if you're looking at this steady downtrend on the Aussie CAD, I feel like this is a very clear kill zone for you to be active off. And as you see, we never reached this kill zone in this little double bottom, so we never really grabbed the sellers that we expect to see from here. Now you compare that to this, you know, this thing where this is the previous structure low, this is your outside return. We came here, we grabbed the lows, and now we failed to break it. So grabbed the sellers, sorry. So in a case of, you know, we grabbed all the selling pressure we can get and we still didn't break the lows, that's an issue, right? And move is made, right? Because I'd be looking to get involved in this move. So that's sort of my theory. Now, in terms of philosophy, like even though I've tested it with it retesting the low level of structure, whether it's here, you know, sort of retest of the lows, that's the way I've tested the success rate. In my philosophy, in trading, I still respect structure, and you can't argue that this becomes a level of structure. So I'm actually quite conservative when it comes to this. I think for me, Aussie dollar might be an example. So let me actually shift it there. So now I'm going into both examples, which are you know, you could say active trend continuation still. Again, you see here, this double little bottom or triple bottom, whatever you want to call it, never came to these levels here, right? This is a big kill zone, so it's not great opportunity, and I spoke about that, but you know, never came to these levels. And if it was to come down to retest these lows or these lows, whatever, or the red line in this case, this is structure. I can't deny that they're structure. So I would be conservative in a sense of I will take targets off here if I could. You know, I would sort of play for targets there. But if I can't, it is what it is, and you know, you sort of shoot for the low and you sort of trust that little execution. But like I said, because of my nature, and end of the day, all it does look like a reversal move, right? We've got a double bottom in the break of that V. So I just wanted to get that out there. I think it can be valuable, and it'll sort of explain a lot of the predictions back from Saturday. So if you want to go back on that video, check it out and see what I'm talking about now with some clarity as the lesson goes, basically. And you know, that's just my theory, you can say, some of my philosophy on the market. You know, if you've noticed, judging by RSI, judging by double tops and bottoms, you know, I've studied, well, you know, in my experience, that's something I've studied personally. Is I don't want to say studied like, oh, I went to uni, yeah, but in a sense of I've put a lot of time, hours and repetitions in. I would find myself missing out on a lot of these moves here because I would stop looking after what's happened here. So it's me coming from a conservative, very conservative background, which you might be like me, to something like this. Now, does this mean that the Aussie CAD or Aussie dollar or whatever other pair can or can't go here? It does not, right? It's all about probabilities. Like I said, we're talking very fine margins. I was talking 50-60% win rate or success rate of these. Now, another thing, you know, where does this pullback come into? Is it here? Do you wait for the highs? So there's a lot more to it. And realistically, I mean, in terms of strength, integrity, you don't want the pullback coming here. You don't, right? Because it's a deep pullback. However, if you are paying attention to these levels here, it would be a better risk reward if you're involved at deeper levels, and you can have something like this, two risk reward, you know, 2-to-1, sorry, and then like a 3-to-1 for your target to extension at the lows. So there's so many ways to play it, but look, I'm here to do this video to try and get your eyes to open up a little bit and just question it. I know you can just question it, but see if you notice it for yourself, because maybe you find something else. Maybe you find that every time it does double bottom, it fails instantly. But keep an eye out for it, and you never know, it might be something that can improve your trading. So hope you enjoyed. As always, if you did, make sure you like, subscribe, comment, and let me know what you actually think of this approach. Let me know what's your approach if price double tops or double bottoms within a trend, and do you still look for a retest? What makes you look for a retest? Alright, and you know, stuff like that. So hope you enjoyed as always, and yeah, in a bit.